to ask y'all. What should we expect as far as the biggest changes with the Affordable Care Act in both 2015 and in 2016? What would you suggest? What would you say the biggest changes are going to be in the upcoming years?
Well, 2015 didn't really have a lot of changes. The rates did not really increase a whole lot for 2015, and it's mainly because the carriers didn't have the claims data to go off of the new plans. So 2016 is where you'll see the biggest changes.
What do you mean by rate increases? You mean actual increases to the price that consumers pay?
Right, absolutely.
Okay, so because there was no claim data, these prices that people have been paying in 2014 and 2015, or will pay in 2015, were just kind of estimates, right?
They were basically darts at a dart.
Darts in the dark. Okay, so they were a guess, everybody. So is it reasonable then to expect that after the insurance industry, which I have found to be some of the most sound financial thinking folks in the world when it comes to actuarials. I mean, they don't miss much. They're better than the gamblers. They're better than the bookies in Las Vegas.
They almost have to be. They live on about a 2% profit margin.
Right. They know their business. Are you telling me that when the claims data comes in, we could see some big increases in the cost of health insurance?
We certainly could. It is a definite possibility because these plans were based off of actuarial tables, and if you have more unhealthy people sign up than you expect,
right,
then you end up hitting a lot of claims that you didn't really expect to see, and so you have to raise the premium to make up for that. So that the insurance carriers are there for a profit. I mean,
sure,
companies are out there to make a profit.
No insurance company that I know is a 501c3.
Right.
And we're all in the business of making some money. That's not a bad thing. But it seems to me like this is going to be that much more difficult because if we have more people insured and claims are up, then rates are going to have to go up. Premiums are going to have to go up.
They are. Another big change that you will see for 2016 that will affect the larger companies is that the employer mandate will go into effect for 50 or more employees in 2016.
And let's talk about that because we want to make sure that there's a difference between obviously an individual and buying health insurance and a business buying health insurance for its employees. And that's really where you kind of hang your hat. Is that correct,
right,
David?
It is.
Tell us about that whole process. I mean, really, what are we looking at for businesses? I'm a small businessman. My family, we own two businesses, and I'm very careful to say that my wife is owner of one because I want to give her all the credit. It's not really affecting us, is it? We have two small businesses. We have fewer than 5 employees in both businesses. Well, really 6. Is it really affecting me?
If you offer a group health plan, it is affecting you.
Really?
The ways that it's affecting you, the way that the law implemented rate change last year, January 1st, 2014, I'm talking about, several things went into effect. There was no longer any underwriting allowed on health plans other than for tobacco use.
No underwriting. That's the whole... That's the thing that so many people are thrilled about because no longer do pre-existing conditions come into play. Is that right?
That's correct.
Okay, so that in itself is a problem because if you can't underwrite it, you can't price it.
Right.
Okay, so go ahead, keep going.
Next problem is called community rating. Community rating brings in several factors in a group health plan, and this is a small group in particular, groups of less than 50 employees. Less than 50 employees, the only way that you can rate a plan now is by age, gender, and location.
What else was used previously?
Health history.
So again, we're going back to there's no underwriting.
Right, and
so we could have a business that is literally filled with unhealthy people, and we're going to insure them. And we're not going to charge any extra because you can't underwrite it.
That's correct. And I did say that gender was a factor. Gender is no longer a factor.
Gender is no longer a factor
So
either.
it's a unisex rate on all plans. But
Unisex rate.
the biggest problem with the community rating didn't necessarily stem from those rating factors. It stemmed from the fact that plans used to be what we call a 7-to-1 age band, and it moved to a 3-to-1. What that means is
Yeah, what does that mean?
age 60 would pay $700 for a certain plan, where someone age 20 was paying $100 for
Oh,
the
I
same
got you.
plan.
I got you. I got you.
And now that has moved to 3-to-1, and with a 3-to-1 change, everybody, usually the 60-year-old was paying about what they should for the plan.
But now the 60-year-old is paying considerably less than he should?
No, not
No.
necessarily.
The 20-year-old is paying way more
Right,
than he should.
So what we
Gotcha.
have seen is a shift in the average age of groups and the average age of people covered from about 38 to about 44.
What size business must offer health care for its employees?
As of January 1st, 2015, groups with 100 or more employees are subject to the employer mandate.
Say that again? 100 or more as of this January.
As of January 1st. What that means is that if that group decides not to offer health insurance, they have a penalty of $2,000 per full-time employee in that group. That is a true penalty. Now, they do have an 80 employee exemption in the first year. It goes to 30 employee exemption in 2016. But, that $2,000 penalty
Per employee.
Is per employee. It is not tax deductible. So it is.
So if I've got
penalty.
let's say I've got 60 employees and I say I'm not offering it, I'm going to pay $2,000 60 times. Is that how it works?
In 2016.
In 2016.
2016 is when the 50
That's when the
plus
penalty
employer
comes.
mandate comes.
Wow, that's a lot of money.
That is.
Now, what's going to be greater, paying the penalty or paying the insurance cost?
We can always sit down and take a look for a company and do that analysis for them, but I will tell you that I have never seen it where it is cheaper for the company to just pay the penalty.
Really? So the insurance is going to save them money over the penalty. Most,
Not
at least in your
necessarily
experience.
save them money, but it will be so close to the same cost.
I got you.
that, and it will save them employees, because the employees are going to go where they can get the best insurance coverage.
Yeah, because unfortunately, or fortunately, I guess, I don't think it's a smart move myself. People decide where they're going to work these days by, at least in part, the benefits that a business offers, don't they?
Absolutely.
And you guys do a lot of that benefit stuff, I know. What do you find for the business owner is the biggest hurdle they've got to overcome when it comes to offering health insurance benefits for their employees? What's the biggest hurdle?
Choice. Choices have been limited in recent years. South Carolina, for example, there's basically 4 fully insured carriers left in South Carolina.
Only 4?
Which you've got Coventry Healthcare, Blue Cross Blue Shield, Blue Choice Health Plan, United Healthcare.
That's it.
That's
How many
it.
were here before?
You have Consumers Choice, who was created by the exchange.
Okay, that's-
as an exchange company
I
that
gotcha.
offers group plans. So you could say it's a 5th. But before, we had probably 8 to 10 to choose from in the last 10 years that we could go out to and get quotes from.
So now you have 4 plus the exchange.
4
So the
plus the
choices have been limited tremendously by the Affordable Care Act.
Yes.
Holy cow. Brian was giving me a signal a moment ago. I know, Brian, we're getting pretty close to another break, are we not? Can you guys stay over for just a few more minutes
Sure.
into the final segment? Because I think there's some other things I want to talk about. Specifically, I want to know what a subsidy is, and I don't want to try to do that when we're about to bump up against a break. But I know that's something we need to talk about. In the meantime, let's talk. Well, nope, here we are. We've got the bumper music playing. Listen, folks, we'll be back on the other side of these messages. We'll be back with David and Brandon. You're listening to the Fran Halloran Show on The Point. Good stuff.
One other,
I just got summoned, so I'm not going to be able to stay around and talk. Ryan needs me to go see a client with him.
Well, go see a client. Get them, Bubba.
Thank you.
Very
It's
good.
good meeting you guys.
Yes.
Yeah, thanks.
Go make yourself some money.
Try.
Did you open your right front drawer?
I know.
Please do that before you leave.
All right, thank you.
Okay?
All right, thanks, guys.
All right, Bubba. I'll see you later.
good.
Excellent. Good stuff. Yeah.
What were
One-
you-
Oh, I was gonna say, you know, the one thing that my employers are experiencing is they can't, like, they don't pay anything for the family, they can't get the tax credit.
Right,
You
yeah.
know, so that's,
Yeah, the small business tax credit, but it's only available in the shop now.
you know, I'm talking about when a group offers a plan and pays 90% of the employee, but nothing for the dependents. Now the dependents aren't eligible to go to the exchange.
Oh, right, yeah,
You know,
that's correct,
so-
yep.
I want y'all to think real quick, and I know this is putting you on the spot. Two things about the individual side of this, and two things about the group side of this. That if you only had 8 minutes to talk to somebody, what would the two things be that we haven't mentioned yet?
Well,
The
the
two
group
things.
plan, we do have, solutions, and
What do you mean?
there have been a multitude of carriers that have popped up within the last year and a half with a new product for small groups,
Really?
and it's called level funding. Now,
So
level
that's
funding-
important.
Yeah.
So that's something. Okay, so that's I'm assuming that is going to benefit the small business.
Absolutely.
Okay, so I want you to mention that. That's certainly, I'm going to say, all right, Brandon, I want you to tell me two things that we need to get across to people about health insurance that we've not talked about from the individual side.
Okay.
Okay? And David, I want you to do the same thing. Two things about the group. One of them you'll talk about this level funding.
Yeah.
What's the name of that's the name of
Well, level funding is offered by several different carriers that we've had pop up. I was talking fully insured just a minute ago with, you basically got 5 options left on the
Yeah.
fully insured side.
I got
And
you.
then on the level funding, we've got another probably 7 or 8 companies that we can go to for level funding.
Okay, so even though there's really 4 in the state plus the exchange, there are other options available.
Yes.
Okay.
And but the level funding, you still got to go through underwriting. They still allow underwriting.
Oh.
So they can actually price your plan.
So your
accordingly.
price may be better.
Your price is
Okay, so let me
usually
make sure. Let me make sure I get this. Then, you can either take the cookie cutter, or you can still kind of go through the old way,
Yeah.
and see if the old way might be a little better for you.
Yeah,
Are
and
you?
it's
Is that what you're telling me?
Partial self-funding is what it is, and it's available to groups down to 5 employees.
Okay. No, all right. So I want you to mention that.
Yeah.
What would be the other thing you'd mention?
The fact that business owners need to really pay attention to what they are offering to their employees, because there's a lot of business owners that have decided to maybe drop their plans and send everybody to the exchange, and that is not always the best course of action, even in a small business, because your employees are going to be limited by the networks. They're going to
Good. Okay, those are the two things you're going to talk about. How
I'm gonna
about
talk about open enrollment, how important it is.
Oh,
when you sign
yeah.
up, when you can't. And I'm also gonna talk about how a lot of people think they can buy a short-term plan that's not qualified.
Oh, that's right, because people have to understand that there are plans that meet the
You have to- you have to
guidelines,
meet a metal
and
plan.
then there are plans that do not,
Yeah.
right? And
So
the
you can still
plan,
buy it and they'll pay the claim, but you're still paying the tax.
but you're supposed, are you paying the full tax?
Yeah, it's just like you don't have a plan.
Just like you don't have a plan. Wow. And what? Tell me how we were going to characterize that. What are those? What did you-
First one is open enrollment.
Why don't we just say qualified plan versus a
Qualified-
non-qualified
Yes,
plan?
qualified plan versus non-qualified.
We talk about that in the investment world all the time.
And I'm gonna talk about open enrollment, about how before you could sign up whenever you wanted because you're always healthy, they would take you. If you were sick, they wouldn't take you. Well, now you have to sign up in open enrollment.
Yeah, what does that do to y'all during the? I mean, if you can only sign up for this stuff during open enrollment, what do you do
Well,
April?
Let me back up. I want to talk about special enrollment too, because there are circumstances where you can sign up.
Okay.
All right. But
Like
yeah,
if there's a fundamental change in your
Yeah, if you
family's
lose your
existence, you
plan,
lose your
yeah.
plan.
talk about open enrollment with special enrollment. You say you have two different types of enrollment periods. One is open
Yeah.
enrollment and the other is special enrollment.
Okay, that's great. So you're gonna talk about open enrollment and special enrollment,
Yep.
qualified plans versus non-qualified plans. Are we up?
Yeah.
Wow, okay. Good stuff.